Have you ever faced a scenario where the market takes a little bit of time before it eventually moves in your favor? I'm sure there are days where you take trades, instantly you see some profits, the market goes in your favor, and then there are also other days where you jump in on a trade, the market can sometimes take an hour, 2 hours, 3 hours, 4 hours, sometimes even a whole day for it to eventually move in your favor. There are so many scenarios where you realize that you take a trade, the market starts consolidating, wasting too much time, takes you into a little bit of drawdown, sometimes even more, but it doesn't hit your stop loss. It just keeps going up, down, consolidating, and then you decide that no, I don't want to go through this stress anymore. Let me just take this loss and then exit this position. It might be a bad trade. And then you realize that you end up taking the loss, you sit back, you come back and look at the market, and it now ends up going in the direction you actually speculated or predicted it to go initially in the first place. And I'm sure this is a really stressful situation for so many of you guys out there. In today's video, I'll be taking you through the psychology of holding a trade, how to understand that you need to stick to your strategy by the stop loss you set for your trades, and then just wait for the trades to run. Yesterday, I faced a situation like this on the market where I took 2 trades on $2 pairs, expecting them to go in my favor. They were in profits, then I realized that they just started consolidating, went into drawdown, just kept wasting my time, going up, down, went into drawdown. One of them almost hit my stop loss, almost 2 pips away from hitting my stop loss. And then before I realized it, it eventually reversed and then went in my favor. If you've been in my community or my VIP, you can attest to the fact that there are so many times where I realize the market is going to go in the opposite direction, and I end up telling everybody to exit the trade positions. If I realize it's going to go back in our direction, I tell them to re-enter again. But yesterday, taking this trade, quite interestingly, we did not exit our trading positions because there were some key indicators I always like to look out for when I expect the market to actually move in my favor, irrespective of whatever drawdowns it takes us in. So today, I'll be teaching you guys all these key things I like to look out for, what principles I apply that lets me understand that the market will eventually move in my direction. So I need to just take time, have patience, and then wait for the trade to go in my direction, because I already have my stop loss in place in case the market is going to do something else, or in case there might be a fundamental which will be released which might cause me to lose more than I'm willing to lose on this position. Before we get into it, I need you to just take some time, pause, smash that like button. I also need you to subscribe to this channel, also hit the notification bell so you get notified anytime I drop a new video or go live on YouTube. There are so many times where you take your trades, it keeps consolidating till you lose patience, and then you decide to exit the trading positions. There are some key things I like to see on the market which tells me to keep holding my trades. So like I said in the intro, yesterday I took 2 trades, one on USDJPY, one on USDCAD, and both these positions tested my patience to the limit. One of them, like I said, was almost a pip away from hitting my stop loss, but it reversed and I went in my favor. I'll be taking you through all the key things I like to look out for, which still gives me the confidence that the market is eventually going to go in my favor. So I need to just sit back and then hold my trading position. So without wasting my time, let's jump right onto the chart. So I teach you how you can easily navigate yourself through whatever psychological stress you go through when you take trades. So guys, if you look on my screen, you can see USDJPY here. It was on both trading positions, USDJPY and USDCAD. So first off, let's look at the USDJPY and how I took this trade. Where I took this trade from, how the market behaved, and then what I did when the market actually reversed and then started stressing me out, or whatever you might call it. So now let's go back to where I got my confirmation. This was exactly where I got my confirmations. You know what I always say about my resistance, price point beyond which the market feels to go any higher within any range. So if you look here clearly, you realize that the market tapped into this resistance. I had no confirmation to take this trade, so all I needed to do was to just wait. That's all I do. I just wait for the market to grant me a confirmation before I take this trade. So I finally got a bearish engulf, and then around 6 a.m. this candle opened and closed. Now basically my entry price was exactly here. Stop loss as well, as I always say, right on top of the range, as you can clearly see here. So entry price here, stop loss right on top of the range. I take my trade here. What does it mean? It basically means that once I take my trade, I set my stop loss. And the one thing I always say is that irrespective of you setting your take profit and then your stop loss, you should always set your lot size based on how much you are expecting to risk on any trading position you take. You cannot just take any trade and then use any lot size you want to use. Know how much you are risking on your trades. That should inform what lot size you use on your trading positions, because your pips times your lot size is what determines how much you risk or how much you make in any trading scenario. So if you look here clearly, you realize that now we finally had our confirmation. First candle, what does the first candle do for us? It drops nicely, then it just goes back up. Like I said, we have our stop loss there. So this was what happened on the trade. One candle took us back, another one also took us back up again, pulled back, then it gave what finally dropped in our favor, as you can clearly see this way. I took the trade here. I went into drawdowns. You can see it came all the way here, 13 pips from my stop loss. Then eventually what gave a stronger double confirmation. Then it dropped back down in my favor. What I always do when I see the market starts consolidating or starts going into drawdowns, I always like to switch to the lower time frame. So if I took this trade on my 4 hour, it means that I simply just switch to the 1 hour. What do you see on the 1 hour? Look at the times exactly. This was where I got my confirmation and took the trade. As you can clearly see here, this was where I took my trade. I took my trade around this price. Then the market started consolidating for all these hours, went all the way up here. So what made me decide to still hold on to this trade was this confirmation I saw here. What made me decide to hold on to this trade was this I saw here. Because switching to the 1 hour time frame lets you know what is about to happen now, which is short term. It means that once it came back into this zone, gave me this consolidation, I got up here, and now I expected it to eventually move in my favor. So you realize that there are so many times where I share screenshots of my trades, and you realize that you see that I have actually taken an extra position up there. A lot of people take extra positions on trades because they feel it's in drawdown. So let me just add another position and it's going to go in my favor. What I'm trying to tell you today is it should always be based on structure. It should always be based on price action. So if I'm adding another position, I just add it based on how this candlestick closed or how this candlestick opens here. So I easily add another position on there, switch back to the 4 hour. You realize that it all falls in this candle. It comes back to my entry price, and it eventually drops down in my favor, which is consolidating along this zone. I'm still expecting it to give a further push to the downside on it. So 60 pips on USDJPY. Now let's switch to USDCAD, and then let me explain. You can see USDCAD is still dropping. You can easily see the chart pattern I talked about last week, the bearish continuation pattern also forming here, indicating a further continuation to the downside on USDCAD as well. Same thing on USDCAD. I also took my entry on this trade over here. I took the sell opportunity here. Then look at what happened. Reversed, went all the way up, formed a double top, dropped back down after this strong bearish candle, and it eventually gave me over 50 pips on this setup as well. So the psychology behind me holding this trade is also in line with what made me hold the USDJPY trade as well. Like I said, anytime I'm in a trade and I see the market reverse on me, I switch to the lower time frame to see what is happening now. So you can see here, my entry price was also here. Right after this bearish confirmation, this was my entry price on it. Took the trade here, expecting it to move further down because I've seen strong resistance along this zone. So now I look clearly here. This is what happened. I see a drop, then boom, it just reversed, went all the way up. And like I said, it almost hit my stop loss. Look, it almost hit my stop loss. Stop loss always has to be where stop loss has to be. It is the price at which you expect the market to invalidate your trading position. So now if you look here, what do you see? Clearly, after seeing this doji candle, which indicates a strong volatility on the market, now the next candle does extremely strong bearish candle, just drops, runs through everything. It eventually takes you into profit. And then like I said, I always switch to the lower time frame if I see something like this. So if you look here clearly, what you see, my entry price was here in this candle. I went into a bit of profit, then I went back up. So switching to the lower time frame clearly lets me understand that it is probably coming to respect this resistance before it eventually drops down. If you clearly look at the screenshot of the trade I took, you realize that I was even able to take an extra position on this trade you see here, all based on the same principle. So now, because I'm seeing reversals, I switch to the 1 hour. What do I see? Candle gets here, then gives me a strong bearish engulfing. Another one goes up, eventually consolidating along this whole zone. So we realize that this whole consolidation took about 5 hours. Like I said, the psychology of holding trades means that I look at my stop loss, I look at the price action, the candlesticks, I look at how it confirms in this zone before I decide whether to exit the trading position or not. I clearly saw a bearish engulfing here, also saw another bearish engulfing, enabling me to add even an extra position right at the closure of this candle. So extra position here, my initial position was here, but because I was able to add an extra position here, this one alone made me over 40 pips. The initial one also gave me its profits as well. So here I was able to hold it straight because of the double top I saw here, because you clearly saw a double top here on the 1 hour. It came back down, then it came here, meaning that I expected it to still consolidate along this zone. As long as it doesn't break this price, I'm still holding my trade, as you can clearly see. So this is how I'm able to hold trading positions irrespective of what drawdown it takes me in, because I have a risk management in place, meaning that I've already calculated my risk. I know how much I'm risking on this trading setup, so it doesn't matter what the market throws at me. So now back to the 4 hour, you realize that after this strong bearish candle, what do you see? You see further drops on it, and the market is consolidating here nicely, giving us what the feather. So even this morning, I'm waiting for a closure on this candle where I'll be able to easily add another position here with my stop loss right up here, giving me extremely good risk to reward, because I'll be risking less than 20 pips on this setup if I decide to take this continuation. So this is how it goes. This is how I always do it. I'm able to actually hold on to trading positions irrespective of what the market throws at me, because I look at the structure, I look at how the price action of the candlesticks are going on the lower time frame, then I also respect my risk management. Then I'm simply good to go. So you realize that yesterday quite a number of you were actually stressed in the community when I sent out the signal, but you realize I never came back to tell you to exit because I expected it to still go in our favor based on the price action I was actually seeing on the candlesticks. Okay guys, let's pause for a minute. I want to tell you guys about Fast Bull. Fast Bull, like I said last week, is one of the most effective and efficient fundamental analysis platforms you have in the Forex space. It means that basically, if you need any platform where you can get your economic news, see and then study the economic calendar, have videos that help you know how to interpret what fundamental news to be released and then how to affect the market, you want to sign up with Fast Bull. You can actually get Fast Bull on your App Store or your Play Store by simply just using the download link I'll pin in the comments. Download Fast Bull and then enjoy a smooth fundamental analysis experience on the market. You can also check out the website of Fast Bull, which I'm also going to leave in the pinned comments. Just hit the link, go to the website of Fast Bull, just study the website, look at all the analytical tools which are there for you. Like I said, we have AI signals on there for you. You also have analysts sharing their speculations on certain currency pairs, indices, and then commodities they trade as well. Fundamentals are extremely essential parts of trading. So yesterday, one of the key things that actually enabled this USDCAD to actually go in our favor was because there was fundamentals on the Canadian dollar at exactly 5:45 p.m. So the volatility we saw in the Canadian dollar came as a result of that fundamental. I hope this video is able to help you when you feel the market is actually turning against you anytime you take your trades. Just switch to the lower time frame, look how the candlesticks are forming on there, try and see if it's actually going back to respect a resistance, going back to respect a support, and then always wait to see that there's actually a confirmation telling you that the market is eventually going to go in your direction. If none of this happened, your risk management should also be there to save you. I hope this video was extremely helpful and then insightful for you. If you want me to shoot more videos like this, I need you to like this video, share with as many struggling traders you know as possible. I have faced this scenario so many times. I even faced it yesterday, like I said, and I'm sure every single one of you has also encountered this situation or these difficulties on the market as well. I need you to subscribe to this channel because statistics say that less than 50% of my viewers on here are not subscribed viewers. So I need you to subscribe to this channel, hit the notification bell, so anytime I drop any video on YouTube or go live on here, you are actually notified, so you can actually join me on here. Keep up with me on my socials: KOMMONFOREX on Instagram, KOMMONFOREX on Telegram, KOMMONFOREX on TikTok, KOMMONFOREX on Twitter as well. Hit the link in my description to join the KOMMONFOREX trading community on Telegram, where I share trading signals on a daily basis, like you saw with this one. You want to also sign up with my recommended broker XNES with the best trading conditions, 24-hour customer service, and then the tightest spreads you can actually get on the market. So if you have your own funds you wish to trade and you need a trusted and a reliable broker to trade with, just hit the link in my description to sign up with my recommended broker. So guys, thank you very much for joining me in this video. See you in the next one.